Here's a detailed summary of the ServiceNow Q2 2026 earnings call transcript, focusing on key financial metrics, future outlook, risks, and executive statements. ServiceNow Q2 2026 earnings call summary introduction. The call began with an introduction to ServiceNow's Q2 2026 results, featuring Chairman and CEO Bill McDermott, President and CFO Gina Mastantuono, and President, Chief Product Officer, and COO Ahmed Zabri. The discussion focused on financial performance, future guidance, and strategic initiatives, particularly around artificial intelligence. Key financial metrics: Q2 2026 subscription revenue growth, 23% year-over-year in constant currency, exceeding guidance by 1.5 percentage points. Remaining performance obligations, RPO, growth, 22% year-over-year in constant currency. Current RPO, CRPO, growth, 21.5% year-over-year in constant currency, surpassing guidance by 2 percentage points. Operating margin, non-GAAP 29.5%, exceeding guidance by 3 percentage points. Free cash flow margin, 16%. Deals greater than $1 million in net new ACV, 123 deals, up 40% year-over-year. ServiceNow AI ACV surpassed $1 billion, on track to exceed the target of $1.5 billion by the end of 2026. Highlights of the quarter: AI momentum. ServiceNow AI ACV exceeded expectations, with net new ACV growth accelerating sequentially, over 40% quarter-over-quarter. Deals including 5 or more ServiceNow AI products grew 5.5x year-over-year. Cybersecurity strength. The company's risk and security business is the fastest growing among the top 10 cyber companies, now a 10-figure business. The AI Control Tower is significantly enhancing this segment. Customer adoption of AI. The percentage of renewal customers purchasing agentic AI for the first time doubled quarter-over-quarter and year-over-year. The number of customers with agentic AI in production has grown ninefold in 9 months. Broad-based demand, strong performance across all workflows, including technology, security and risk, CRM and industry, core business, and creative workflows. Strategic acquisitions. The integration of Moveworks, Vesa, and Armis is proving effective, amplifying core offerings. Partnership ecosystem. Deepening integrations with partners like Microsoft and NVIDIA. Industry growth. Business and consumer services led with net new ACV growing over 6-fold year-over-year. Education and telco and media also showed impressive growth. Renewal rate. Maintained a best-in-class renewal rate of 98%. Large customer growth. Ended the quarter with 658 customers generating over $5 million in ACV. Lowlights/areas of focus. Gross margin pressure. While operating margins were strong, there was some short-term pressure on gross margins due to increased hyperscaler partnerships and accelerating AI adoption. Management anticipates mid to longer-term improvement in this area. Timing of revenue recognition. A portion of the Q2 outperformance was due to a timing shift of on-premise revenue from Q3 to Q2, particularly in the U.S. federal sector. However, management expressed confidence in both Q3 and full-year guidance. Management's forecasts and guidance. Full year 2026. Subscription revenue. Raised by $15 million at the midpoint, now projected between $15.755 billion and $15.770 billion, representing 21% year-over-year growth in constant currency. Subscription gross margin, expected to be 81%. Operating margin, expected to be 31.5%. Free cash flow margin, expected to be 35%. Q3 2026. Subscription revenue, expected to be between $3.975 billion and $3.980 billion, representing 20% year-over-year growth in constant currency. CRPO growth, expected to be 20% in constant currency. Operating margin, expected to be 31%. Significant risk factors. Economic uncertainty. While not explicitly detailed as a risk, the ongoing search for AI ROI by enterprises suggests a dynamic economic environment where companies are scrutinizing IT spend. Competitive landscape. The enterprise software and cybersecurity markets are highly competitive. Execution of AI strategy. Continued successful. Development, deployment, and monetization of AI-native products and services are critical. Regulatory and compliance. Particularly in the cybersecurity and government sectors, evolving regulations could impact operations. Integration of acquisitions. Ensuring successful integration and value realization from recent acquisitions. Most important statements from the CEO, Bill McDermott. We are who we said we were. McDermott emphasized the company's consistent track record of exceeding expectations and delivering on its long-term vision. The path to value isn't just making AI. It's deploying AI securely across the enterprise. He highlighted ServiceNow's role as a critical layer for governed AI deployment, providing certainty in a complex tech stack. ServiceNow already was a $1 billion-plus cybersecurity business. Today, our risk and security business is the fastest growing of the top 10 cyber companies in the enterprise. He clearly articulated the significant growth and strategic importance of their cybersecurity offerings. Is ServiceNow becoming a cybersecurity company? We now have a 10-figure cybersecurity business that's growing faster than all the other top cybersecurity companies. This statement directly addressed a common investor question with a strong affirmative. When will customer deployment of AI mark an inflection point for ServiceNow's growth? It already has. He declared that AI deployment is already a significant driver of their growth. ServiceNow only does deterministic solutions. This was a key differentiator, contrasting with what he implied are less predictable approaches from others. AI that only advises is a cost. AI that completes the work is a return. This defined the practical value of ServiceNow's AI capabilities, focusing on action and ROI. ServiceNow is the rules and rails of the enterprise. We're in command of the agentic enterprise from workflow to cyber. He positioned the company as the central orchestrator for the future of enterprise operations. Cybersecurity will become a larger part of ServiceNow in the next few years. This indicated a continued strategic focus and investment in this area. Most important statements from the CFO, Gina Mastantuono. Q2 was an outstanding quarter that highlights ServiceNow's broad-based demand, strong execution, and operating leverage. She underscored the strong performance across multiple fronts. Once again, we beat the high end of our guidance range across every top line and profitability metric, reinforcing the consistent outperformance against expectations. AI net new ACV growth continues to outpace expectations, emphasizing the strong demand and early success of their AI offerings. The AI Control Tower is supercharging our security and risk business, and ITOM is seeing strong demand tailwinds for the CMDB to serve as an essential governance and data foundation, connecting key product areas and their impact. We are raising our full-year guidance. I'm very confident in our Q3 and full-year guidance, providing updated financial outlook with strong conviction. Customers aren't paying us for tokens. They're paying for resolutions. That's why enterprises are choosing ServiceNow to convert AI ambition into measurable ROI. Similar to the CEO, she focused on the tangible value and return customers receive, not just underlying technology components. While still early, we're already tracking ahead of our target for AI to reach 30% of ACV by 2030, providing an update on their long-term AI penetration goals. Our new AI-native SKUs are making our agentic solutions more accessible across the customer base, as evidenced by deal volume amongst first-time ServiceNow agentic AI buyers growing over 45% year-over-year, highlighting how new offerings are driving wider adoption. In summary, ServiceNow delivered a robust Q2 2026, exceeding financial expectations, particularly in subscription revenue and operating margin. The company's strategic focus on AI and cybersecurity is yielding significant results, with AI ACV surpassing $1 billion and the security business showing exceptional growth. Management raised its full-year guidance with confidence, driven by broad-based demand and strong customer adoption. The AI Control Tower was highlighted as a critical differentiator, providing governance and security for AI deployments across the enterprise. The company's ability to deliver deterministic solutions and tangible ROI for its customers was a recurring theme.